Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that gigapump that we've been waiting for on the Bitcoin chart. Guys, just take a look at this sea of green behind me on the crypto bubbles over here. And if we do just jump straight over to the charts, then we can see that we did, in fact, get that breakout that I was talking about. And guys, as we'll see later in the episode, we hit key levels that I was looking for. In particularly, we held that 26,500. What did I tell you, Alpha Fam? That look at the Bollinger Band midline on the daily. If we held 26,500, that would be a pivot that we could launch off of, and then breaking 27,000, that there would just be the potential for a liftoff. And so, of course, that's what happened. And yes, we could have come down to test this liquidity at 26,000, and under 26,000, we could have lost this chart to the downside. And yes, we could have pressed against the bottom of the wedge and broken down all the way to 23,000 or even as low as 20,000. But guys, that's not what happened. We actually ended up dropping. The news about BlackRock came out. I mentioned that might be just bullish enough to just kind of truncate our liquidity grab, and the bears, they just didn't have a chance. The bulls pushed us up, and then of course the Fed paused their interest rate hikes, and then we heard that Fidelity was also looking to get into an ETF, potentially like BlackRock, and we also have now heard that China is dropping its interest rates, which actually just boost liquidity in the markets even more. And so, guys, we did just cross the $29,000 mark right here. And guys, that does look super bullish. Why does that look super bullish? Because look, we have taken out 28,500, and we are on our way to that 30,000 target that I did promise you. And what did I tell you, Alpha Fam? If you didn't sell up here when we were talking about those crosses, right, those bearish crosses originally, when we were back here, and you saw the 9 and the 21 cross bearishly when we started closing under the 21 a couple too many times and made a lower high, then of course I mentioned that there was a good chance that once this wedge started to form here and we saw this pattern taking shape, that there was a good chance that we were going to have a fake out, and that ultimately we would probably retest that liquidity somewhere around 30,000. And so I was warning you, Alpha Fam, don't just sell your coins just because we're having some type of scariness in the market. This is not the place to sell your coins. This was the place to sell your coins. And so if you were down here, you're just looking to buy at these levels. If you're up here, you're looking to sell at these levels. And that's how these wedges work. And then, of course, the market makers sometimes push this extra low just to grab some extra special prices just for themselves, right? And just to liquidate some stop losses to use as rocket fuel. But in this case, they didn't need that liquidity as rocket fuel. They had bullish news in the form of BlackRock, Fidelity, the Federal Reserve, and also China's, right, Bank of China lowering interest rates. Now, as we're pushing up here into a 29,000, then we probably are getting fairly overheated on the hourly, maybe even through to the 4-hour. We do have some liquidity down here. Now, we have just been so bullish that we actually haven't been picking up our fair value gaps, but that doesn't mean that we won't. It's just that we've just been this bullish on the charts, guys. You could reasonably expect that we could have a pullback just because this is very overheated. This is like one of these pushes like this, guys, and we are so overheated that often there's just like a checkpoint, right? And we come back maybe even to test this wedge again. If we do, then I would say that is a buying opportunity, okay? Because you missed the opportunity at the bottom of the wedge, which is where you should be buying. At the top of the wedge is where you should be selling. And then this one is definitely looking for an opportunity, which unfortunately we never got. But hey, like no one got that opportunity, so nothing was missed. Just you have to remember that once we came back into the wedge here and we crossed the midline that I was telling you about, guys, that if we had reclaimed the Bollinger Bands and then gotten outside of this wedge, that the direction would be up, and that's exactly what we got. Congratulations, Alpha Fam. You guys are absolutely killing it. And how many times have I mentioned 26,500? How many times have I mentioned 27,000 over and over and over again on this channel? And then again, how many times have I promised you that we are highly, highly, highly likely to come up and test that $30,000 area? And so again, guys, like this is where you have decisions to make. Do you think that this is going to be a lower high, and you think that we're going to just drop back down and this is the fake out before we just plunge to hell? Or do you believe that BlackRock, that Fidelity, that the Fed, that the Bank of China has actually changed the narrative sufficiently to push this thing back up, take out our highs, and maybe even get to that 35,000 that I was talking about, potentially even in the 40,000s, which I did mention is something that's on my radar, guys. Let's go ahead and just review some of these key levels that I gave you. There's really nothing that I can do for you right here because we've just been watching this thing fly. And so whatever I gave you down here that was the bottom line. You were either in or you were out. Okay, I gave you the line in the sand. I gave you 26,500. I told you 27,000 was going to be the confirmation of it. Okay, we had conditions of bullishness. We had, which was, of course includes that BlackRock, Fidelity, the Fed, and the China central bank. And then we had validation by holding above 26,500. And then we had confirmation at 27,000 and the breakout of that falling wedge, that 3-month long falling wedge that we have been following just so tediously, and which I've been getting a lot of hate over for being bullish on it. But in fact, it did break bullishly, guys. So again, we are always looking for conditions, validations, and then confirmations when we are going to go for a fully confirmed trade. Now, you guys can front run some of that stuff, right? You can buy here, you can attempt to buy up here, you can buy here, you could have bought right there, and that would have been front running. You wouldn't really have had the conditions for a reversal. This stuff could have just kept going down, right? Okay, so no one's going to blame you if you didn't buy there. You're taking a chance, right? You're basically believing strangers on the internet. You're believing in a system. You're putting your faith in a pattern that has only a 70% chance of breaking out, which is a good chance, but it's not 100%, right? And so you didn't have, the proper conditions exactly. Some would say that a falling wedge is the proper conditions. I would be one of those as a pattern trader of this type. But, if you're not a pattern trader, maybe you didn't have conditions. That would be a pretty heavy front running. And then once we got over the mid channel here, you could have taken that and you would have been taking a little bit of a riskier play, right? Because you would have been at the top of the wedge and you're buying at the top of the wedge. I can understand if a lot of people don't feel comfortable buying up here, again, just by trusting some YouTuber or whatever. Although we did put in a condition that if we were to fall under 26,500, just get out and see what happens at the bottom of the wedge. But as long as we held around that 26,500, then we have a validation of this idea. We started to consolidate there. We started to push up, and then that was, of course, the confirmation. Now, the confirmation is the least risky trade to take. And a lot of smart money concept and all these other types of traders, they kind of act as rivals. Sometimes they'll say that that's actually a very risky trade to take because it's often a fake out and it just comes back and then you get liquidated or whatever. But as long as we know where to put our stop loss, right? We have a breakout at 27. We take it. Our first stop loss is at 26,500. We're not going to get hurt. Okay. And then what happens as soon as it starts going, we move our stop loss to entry. And so as we pushed up, your stop loss is now at 27,000. There's no way you could lose money on that trade. Okay. So tell me how that's not a safe trade, Alpha Fam. All right. It's only a safe trade if it was just like a flash wick and then down. But we had bullish conditions. We had the volatility in our favor. We had the momentum pools, and the volatility pivots, and all of our good work. We had the philosophy of the falling wedge. We had the Bollinger Bands midline. We had a lot of confluence in our favor. And so, again, I just want to congratulate you guys. I know that this 3 months has been very tedious, but if you stuck with it and if you're now in this trade to the upside, I think you are being rewarded for your effort, guys. So really good job. Now, let's of course just do a review of those old setups that I had put in the last episode, just so we can see, for ourselves, like, does this stuff work out or does it not work out? And I'll have to follow up with another episode later on. Because we're not consolidating yet anywhere, so there's nothing I can really say or point to. Well, what we can see is that on the hourly, of course, too many hours have passed, okay, guys? So you can't really trade the macro off of the hourly, but you can take some entries off of these levels. And what we can see is that, when we crossed down from it, it did cross when we put into it, and then it came back up and down. Like when we entered it, yeah, we maybe had a fake out here, but we did push across. And again, we came down into it. We crossed it down to the downside. You could have taken that trade, could have taken that trade, could have taken this trade, pushed back up into it. There was a fake out here. You would have gotten stop loss, but then the second time you would have pushed all the way through it and you would have had this trade. We came back down. Right, we pushed down, and then you could have taken that short, and then when we got back above the volatility pivot, you could have taken that entry. And so after taking this last one, okay, and I'm just using the same hourly, like literally there was like half a dozen trades that you could have taken successfully. I think there was two that would have stopped you out. Maybe you took, some type of small transactional loss, okay? But then you had like half a dozen that were successful just on these hourly candles, which you would have been trading on the 5-minute or the 15-minute. You would have plenty of time to manage those ones, okay? So no harm, no foul. Perfect. Great. Good job. It's just a little bit confusing because it just took a long time for this chart to rev up. But the key point here, okay, and I'm going to zoom in for this one, is that let's go ahead and go to maybe the 15-minute. See if we can. Nope, we need the 5-minute on this one. Yeah, let's go ahead and just get some detail, just some fine granular detail here. Okay, and so what we're seeing is that you could have taken, this was downward momentum, right? But as soon as we started getting upward momentum into the momentum pool, then you can take that trade, you can get launched into this direction. And then, yes, we did come back, but again, we had this area and then we pushed up. And then when you saw that we were consolidating above the momentum pool, above the volatility pivot, that would have been the trade to take. And then on these 5 minutes, you could see that we did eventually get embedded above the bullish control zone. Okay, so here's the bullish control zone and the Bollinger Bands midline. And you could have taken a chance on that too because we were above the volatility pivot, we were above the momentum pool, and now we were above the bullish control zone. So if you're embedded above the Bollinger Band midline on, above the bullish control zone and you've got the volatility pivot at your back, then yes, we did come all the way back and we did kind of retest the bullish control zone. Look at that pin perfect precision retest of the bullish control zone, and then we just took off. So basically, you saw us. Let me see if I could just rewind all these scribbles and stuff. But basically, what you saw is that we essentially just broke out from the pool, and then having broken out from the pool, we eventually attempted to break out of the wedge here, but we got rejected from breaking out. We tried again. We held the Bollinger Band's midline and we held the bullish control zone. Tried to break out, got rejected again. This time we held the bullish control zone, and in holding the bullish control zone, just look what can happen, okay? Just look what can happen, guys, if you hold the bullish control zone. So you got to take a chance, guys. You got to take a chance. The volatility pivot was underneath us. We had claimed the alpha momentum pool, and we had claimed and bullishly retested the bullish control zone on this hourly. What do you want me to do? Like, buy the Bitcoin for you? Okay, so that was the play, guys. That was the play. So on the 1 hour, you could have had the earliest. It would have been sloppy. It would have been choppy. You would have a couple fake outs, but you would have had overall had a bunch of wins, and then you would have had the epic trade of your life right there. And it would have been so exciting. But let's go ahead and go over to the 6 hour, and let's just see how did the 6 hour chart handle itself. And here we have a much clearer picture because, of course, the 6 hour isn't going to be as choppy as the 1 hour. But remember, this was a couple days, right? This was like a day and a half ago or so. And so we pushed up. We definitely crossed the pool. Love that. Dropped down below the pool. Great. Who cares? You take the long on the bottom of the pool. Yes. Excellent. We went up to test the volatility pivot. We kind of got trashed back down. Okay, you could have taken that short on the pool, but as soon as we held the bottom of the pool, you could have longed it back up. And then from there, we just started to go. Again, we tested the top of the wedge, came back down. Look at our candle sitting beautifully on the bullish control zone on the 6 hour. And then having held that, being above the volatility pivot, being above the momentum pool, that was permission to take that long off of the bullish control zone, okay? So you could have taken the long off of the momentum pool, or you could have taken the long off of the, you could have taken the long off of the volatility pivot, or you could have taken the long off of the bottom of the momentum pool, because we were underneath it and we pushed up. So momentum was pushing in an upward direction. And again, like when we came across the volatility pivot, we were pushing up, we came back, we held above the pool and then pushed up across the volatility pivot. Could have taken the long there. Again, we pushed up, just couldn't break out of the wedge, fell back down. But in falling down, we were able to bounce back up, and then so we were crossing bullishly above the bullish control zone. You could have taken that long off of there because, again, above the bullish control zone, above the volatility pivot, above the momentum pool. Why not take a chance, guys? We were above that 26,500, I said, right? Why not take a chance? Okay, just take a chance. You can bring your stop loss up to entry. These were 6 hour candles. You had plenty of time to manage it, okay? So I know, this is all kind of like scratchy and stuff. I just want to show you like the setups that I gave you on the last episode. A lot of you didn't even watch the last episode, but for those who did, I think that you were richly rewarded with just brilliant entries. And again, it doesn't matter if we are personally bullish or bearish, okay? It only matters, did we cross the line or did we not cross the line? Did we hold the line or did we not hold the line? So here's the daily, and we're still on the 6 hour, but you can see the daily momentum pool right here. And what happened, okay, guys? Like we were already pushing up at the start of the day. We came back, we held the top of the pool. The volatility pivot's all the way down here. So automatically we're already above the volatility pivot. The fact that we held above the pool meant that we were already bullish on the daily. Okay, and so what happened here, we got above the neutral point of control. Again, the neutral point of control is just an extra confluence. Now the bulls have control of the chart, or the majority control of the chart, not full control. And you can see that the bulls gained full control above 28,300 now, but we were able to get a nice push off of this, guys. This was, you know, this was permission to long. This was permission to long, okay? And again, even here was permission to long. And I don't know if you can see it, but are you seeing what I'm seeing off of that bullish control zone on the daily key level here? Look at that. Look at that. Okay, I made this a long time ago, guys. This line. Look at this. Look at this price action right here to the dollar precision. Okay. Boom. Right, boom. And where would you put your stop loss? Right there. Right underneath it. Why not take a chance? Why not take a chance on my key levels, guys? Why am I making it if you're not taking a chance? Well, whatever. You guys don't have to do it. You guys can do whatever you'd like. This channel is just for me to learn how to improve my own trading so that I can take full advantage of the bull market. If you guys don't want to, that's on you. Or you guys don't trust me enough, well, that's maybe on me, right? Guys, let's go ahead and jump to the 2-day just to see what I was saying about the 2-day. And lo and behold, same thing. Look at that candle. Boom. Boom. Right off the neutral point of control. Look to the dollar precision right off the neutral point of control on the 2-day chart. I'm telling you guys, it doesn't matter which of my charts you use. They're all going to play out, guys. They're all going to play out. And yes, if we had broken under the pool and we had lost the volatility pivot, then we would be shorting where? Back to the bottom of the wedge. Okay? But we didn't. We didn't. Look at this. We didn't. We held the top of the pool, permission to long. We got above the neutral point of control, permission to long. Okay? And we were above the volatility pivot, above the pool, above the neutral point of control. Why not take a chance, guys? Why not take a chance? Epic trade of a lifetime right there, right? This thing could keep going. You don't know. It could keep going for the next year. You have no idea. You won't know unless you take a chance, right? But I'm just telling you, my setup worked. Okay, my setup worked. Here's the 3-day. Okay, the 3-day. Right here, as I was mentioning, above 26,500. And this one was a little bit more narrow, but you can see, right? We popped up here, tested the top of the wedge, broke down. You don't long when you're breaking down, guys. Okay? We popped back up, making some momentum to the upside, and being above the volatility pivot, reclaiming the pool. You could have longed at the bottom of the pool, and because we're above the pivot, if you had missed the bottom of the pool, you could have taken a chance at the top of the pool. Okay, that was your second opportunity to take a chance. Okay, so I love these setups because they give you 2 chances for entry. And, lo and behold, there we go. And where's the upper limit up here? Somewhere around 29.9 before we get into the bullish control zone. So maybe we could keep going. I don't know. 3-day chart, has a couple days left on it. So we'll find out. I just want to point out that these bullish control zones, they don't work the same as the momentum pool. The momentum pool, sometimes it's really big, sometimes it's really narrow like this, but when it's really big, usually we cross it, okay? Usually we at least cross like 3/4 of it, okay? And so it's always a good opportunity to try to take the momentum trade, the momentum pool trades. As far as the bearish control zone and the bullish control zones, those are war zones between the bulls and the bears. So, you don't necessarily think that we're going to get there, but we could get close to it, okay? But for the momentum pools, we often just cross side to side, side to side, side to side, back and forth, So just understand that. And then we often tap the volatility pivot. It may not be perfect. There may be a small gap. It can get front run, that sort of thing. The volatility pivot is volatile by nature. It shifts during the day slightly. So it's never really in one place the way that the pool is. Okay, the volatility pivot slightly wobbles depending on what's going on in the charts. And so, the bullish and the bearish control zones as targets are just fairly inaccurate, but in the right ballpark. The volatility pivot is a target that often gets hit, but if your momentum is then the opposite direction of it, it also just lifts you up in that direction. Okay, so it's kind of like a double-edged sword. Sometimes we come back to test it. Sometimes we can just launch. It's kind of like just somebody pushing you at your back if we're launching off the momentum pool. And then the momentum pool, you can just crisscross and trade side to side as much as you want. That's how my trading system works here. So plenty of opportunities, guys. And then let's go ahead and take a look at the 5-day, because the 5-day was beautiful. In the last episode, I was telling you, like, we were over here, and I said, guys, like the 5-day momentum pool isn't filled yet, and we hadn't even tested the volatility pivot. So I was saying there's a good chance that we're going to come up to 27,000 at least, and that most likely this pool will get filled, which means that we do have a chance of getting up to that 28,000. And sure enough, here we are at 28,700. And if we close this way in 3 days, we're going to be above the volatility pivot and above the momentum pool, all right, as long as we hold above 27,900. So for the 5-day, I am looking to hold 27,900. And if you'll notice, that's where the Bollinger Band midline is, which suggests that we could easily get embedded above it and just continue to push on our way. And the 5-day is a good front runner for the weekly. So, it kind of gives you a little clue, a little heads up of what's going on. If this thing fully retraces and gets under 27,000, then I'm going to be a little worried, because that's going to be underneath the volatility pivot on the 5-day. Again, 27,000 is my line in the sand. And, on some of these time frames, it's better for us to be above 28,500, 28,000. But on some of these time frames, just 27,000 is perfectly fine. Okay, just as long as we're above that. And I don't want to re-enter this wedge. I want to be done with this wedge. We could go do a deep retrace and just fake people out, but I want to be done with this wedge and just go on our way, because we really need to get these Bollinger Bands underneath us on these higher time frames. Let's go ahead and take a look at the weekly, guys, because this is the one that I was telling you about, where we could just have a fake out, okay, sort of like what we did right there, that we could just have a fake out and we could just push up and get on top of that Bollinger Band midline. And if we did, then we could potentially have an epic run in store for us. And sure enough, we're doing it, guys. Like, we are doing it. And so I don't know exactly how high that we're getting. Me personally, I'm targeting ultimately in the 40s, just for this mid-cycle kind of bear market rally. And then maybe we come back down, maybe test our lows, maybe some type of market crash or something, okay? And then, we just continue to go up from there, into the Bitcoin halving, and then into the real bull market, maybe in 2024, okay? Something like that. But for 2023, while we're still in the bear market, for a bear market rally, I think that this is, very easily possible to get into the 40s. And so you've seen my philosophy on these falling wedges and my bullish attitude ever since 16,000, okay? You know that we took this trade on this channel. You know that we plotted out this entry on this channel. So you guys know that I was bearish all the way from here, and that I had called for a crash up here, okay? I had called for a crash hypothetically up here, and then I exited the market right around here. And I've been trying to warn people, don't get back into this market all the way until I just told you guys, take a chance over here and take a chance over here. And, we did take a couple trades right here and right here. We did take a trade, I believe it was here and here. And we got out here. We got out here. We were not part of any of this area. And yeah, and I can admit, I got faked out on this one. I didn't know what was happening here. But I did know that we were above the Bollinger Band midline, and for me, I wasn't worried because this was our entry, right? But yeah, I wasn't sure what was going to happen. That was a weird moment, okay, with that banking crisis, right? But just to be honest, I also got faked out on that one. I didn't know what was happening. But that's pretty good so far. And now I can say that we had an excellent track record over here. And I got a lot of DMs and comments on the YouTube, and I delete a lot of the just like troll stuff, but I got a lot of comments like, we're gonna drop to 8K, 4K, 10K, and it's just not in my philosophy. I mean, maybe we could have come down to this area and then popped up, and I still think it's possible later on that we could revisit this area, okay? But right now, I just don't see it, guys. I just don't see it. I see us more pushing up to 40K. Yeah. But anyway, so that was the weekly, and you can see what's happening right now. We're testing the volatility pivot on the weekly. Like, a lot of you guys thought we wouldn't even get here. Okay, you thought I was just BSing you when I said that we're likely to come up to 30,000, and look, we're above the volatility pivot on the weekly with 4 days left to go. That gives us a bias now to the upside. Okay, so there's a good chance that we can actually within this week tag that 30,000. Okay, this is just all in one candle, maybe 2 candles. We could get to that 30,000. What I say, we would need a gigapump to get out of this mess, and we got that gigapump. What was I saying? Bitcoin was running out of time. Otherwise, it was in risk of bearishly testing that inverted head, that head and shoulders, which could have broken down and gotten embedded under the Bollinger Band's midline, and then we would have dropped to hell, right? But we got it. We got the gigapump. Just in the nick of time, we got the gigapump. And let's go ahead and see what's going on with our EMAs. Look at this. Look at this, guys. We were so bearish. We were so, bearish down here under the 21. We just barely wicked under it. Popped right back up above the 21. A beautiful recovery on Bitcoin right there. Held the 21. Got above the 9 and the 10 up here. We got above the 4. Look at this. Just popping up. Just popping up, guys. Doing what we need to do. You can see there's like an 89 EMA or a 100 EMA, whatever, up here, which could give us a little of a headache around 30,000. Okay. Could bump our head into that. Maybe there's a little buffer zone here. We could bump our head into it just, right now from afar, right? And just kind of reject off of this volatility pivot and then do some type of retest. But man, it would be cool if we closed the week above that volatility pivot. That would suggest that we could just go. Okay. But again, we have 4 more days, almost 5 more days left in the week. So, be humble, right? Be humble for now. But this was a great pump. Guys, let's go over to the 2 week and just see, did our, and again, like if we put on the weekly, where was your permission to long on the weekly? Right here, right here, right here. We were falling down. Our momentum changed to the upside. It's okay you didn't catch this. Don't worry. You don't have to be perfect. But when did we get permission to long? Okay, this was just conditions. We got a validation right here when we got above the Bollinger Band's midline and we re-entered the momentum pool. We had permission. We had validation. And then we could have crossed that momentum pool, right? That's the easy trade. And now comes the hard stuff, right? Then you have to decide, are you going to take that next long to the upside? And if you feel like the market's bullish, then you can continue to do so because we're underneath the volatility pivot. There's the risk there. You could have gotten rejected back down, okay? You could have been hard rejected back down. But you can have your stop loss. Plus, if your entry was down here, who cares? You get popped back down. Okay, you took a small loss on your trade. Whoop-de-doo, right? You're still in profit, right? You had permission to enter right here based upon the alpha trading strategy. And then you would have just been kept, you would have gotten that entire candle, guys. Okay, you would have gotten that entire candle. So being inside there, you already by default had permission to long to the other side, and then you just had to manage your stop loss, that's all. Let's look at the 2 week. And 2 week, same thing. Same exact thing. We were falling, our momentum was down. We started to rise, right? We rose through the momentum pool, and then we were sitting on top of the momentum pool. And you could take a chance. You could take a chance to long to the volatility pivot. Now, I personally don't like that setup. I would have preferred to take that entry down here. Okay, that would have been the previous 2 week setup. But you could take a chance with a tight stop loss. And so if you're just if you're trading on the 2 week, which is a huge time frame to trade on, most people do not trade on the 2 week time frame. But you could have been highly successful with it, okay? And again, if we had dropped below there, if we had embedded below 25 200-ish, then you probably could have taken the short because we would have been under the pool, under the momentum pool. Would have implied down, right? But the fact that we had falling momentum that changed into rising momentum through the momentum pool, and then we sat on the top of it, you could take a chance for that long, even if you're trading on the 2 week. Again, guys, you don't have to trade on the 5 minute. You can trade on the 2 week if you want to. Let's take a look at the monthly. And the monthly, look at this, basically the same deal. Falling momentum, converted it into rising momentum here, rose through the volatility pivot, got to the top of the pivot, and just for the whole month of June, we could have just been taking that long to the upside ever since 27, 223 this afternoon, right? I'm just saying that on the monthly, we had validation above 27, 223 because our pivot was down here. Above the pivot, above the momentum pool, at 27, 223, you could have just taken that long. And you know what? You also could have taken it above 26,500, which is that number that I gave you over and over again. Because you can take it at as long as the pool's underneath you. I mean, as long as the volatility pivot's underneath you, you can take it at the bottom of the pool, and then you can also take it at the top of the pool if you want. In terms of your long, you have two options, right? In case you missed the first one, you can get the second one. Again, I love that setup. So that's how I could tell you guys, above 26.5 and above 27,000, I have no choice but to be bullish. And then here you can see the neutral point of control at 27.8. It's basically 28,000. And then above 28,000, it's just more strength. But here's the thing that we have to be aware of, okay? And why I tell you that we need to get above that why I limit the chart at 30. And I think you can see it just staring you in the face. Here's the Bollinger Band's midline, okay, on the monthly. So if we just come up to that 30, we're going to tag it. Okay, cool. We're going to tag it. But we could get rejected back down off of it. So what we're going to have to do is we're going to have to flip 30. Okay, we're going to have to flip 30. But hold on to 29, flip 30, poke around 31, start showing something up here. That's why I can only promise you to 30, guys, okay? Approximately that area, right? 29 to 30, right? Which we're doing it. We did it, basically. Now we have to see, is there strength up here or not? Because we want to see, are we going to get above these Bollinger Bands or are we going to get rejected by them? And this is an open question, okay? The end of the month, right? What are we, like the 20th or something right now? Then the end of the month is like, 10 days away or whatever. So yeah, guys, I mean, we're gonna have to see how does this month close, and hopefully we close above 30K. even if we don't, if we close above the neutral point of control and above the momentum pool and above the volatility pivot, we're still pretty bullishly oriented. We could have another go. And then what would I say? The 3-month volatility pivot is up at 46. That could come down. 6-month volatility pivot is up at 56. That could come down. And so I wouldn't put the 40s out of our range and maybe even as high as 50s because we often test the volatility pivots. Okay, that's why if we lost this area, we could also test this one down at 18K-ish. Okay, it could rise up a little bit. Price is in the middle here, so this could fall, this could rise over time. All right, guys, that was your episode for today. That was your alpha. And, guys, I know that this has been a long process to, basically trade this wedge. There's been a lot of fake outs, just up and down, 10% moves, just up and down, up and down, up and down. The perma bears, I told you guys, they just want to get their, they just want to try to worm their ideas into your head. Just, I want you to stay as neutral as possible. Some guys, they just want they want a Great Depression. They want the dollar to, collapse. They want the US, to collapse. They just want that kind of stuff, okay? And so they're looking for it too much. But we're not going to have our emotions into it. We just have our lines in the sand, okay? Below 25, bearish. Above 27, bullish. Okay? Front runnable at 26.5. You might want to worry about your positions if we were below, 26, right? Well, in this case, the market chose. It embedded above 26.5, and then we caught 27, and we went. Very simple. Easy peasy, guys. Okay, easy peasy. And then this is just a visual aid. Okay, just a mid-channel on our wedge. Are we on the bullish side or are we on the bearish side? But I've been your friendly guide this entire 3 months. And we're about to have a 3-month closure at the end of this month. We're about to have a 6-month closure at the end of this month. A lot of interesting things coming up. We could be at the beginning of a new bull market. Okay, we might never come back to our lows. Just want you to keep open-minded about that. Right now, I see the possibility that we could eventually come back, to that 18 to 20K area. But we don't necessarily have to. Just keep an open mind, okay? All right, guys, that was your alpha for the day. Stay safe and happy trading.